Good day, everyone. I can't say good morning anymore, so we'll just say good day. Delighted that you'll be able to join us for our new monthly broadcast every third Thursday of the month at 12 noon. So absolutely delighted you'll be able to join us. And let me say a quick hello to both John and Jonathan. How are you guys?
Very well, thank you. Hey, David. How are you?
Yeah, fantastic, Jonathan. Looking forward to hearing from you later on. You're actually joining us from Copenhagen, as we were just discussing.
I am. Yeah. It's nice. Weather's it's pretty grim today. but
that's grim. Because you're talking to someone in Britain, therefore it's going to be grim. So
yeah,
don't want anyone visiting. Don't tell them it's good weather.
Mm-hmm. Mm-hmm.
And if we had longer, we could have a discussion about the price of beer in Copenhagen, and you can educate John as to how Brits decide where to live in Europe.
Or where to go on their travels based on price of beer. Probably an indication of my insight into maybe the people I know or the
yes, I think it is. I think I have a
British
feeling
population.
it's gender centric, that in its blokey when it comes to the subset, that it's not the sort of aspirational museum set that sip wine that worry about the price of beer.
I'm not a museum goer, am I, John? I've been to a few museums, but yeah, you're kind of, maybe you're saying I'm a bloke.
I mean, I thought the big news was all about Noma and declaring that they're going to have to close because the economic model doesn't work post-COVID.
Well, yeah. I didn't.
Anyway, we can move on from there.
Yeah, well, that's definitely one for another day. So again, welcome everyone. Thank you for taking your time to join us. This will be a bit longer than our normal weekly ones. We'll go around about 40 minutes or so. This is just for the regular attendees. This is just an evolution of what we've been doing. John, now I'm guessing almost be 3 years in March. We started this weekly broadcast during COVID. Must be about 130, 140 episodes on our YouTube channel. And we're moving monthly, I suppose for a number of reasons, but one is that we can go a bit slower rather than trying to blast through lots of information and spend more time with our guests and some key topics. So how are you looking forward to the new format?
Well, we'll see if it achieves the goal of going slower or whether we just find a way to pack more in.
No, definitely the former. So my name is David Johnson. I'm the CEO of Leo Crowdfunding. We're an equity property crowdfunding platform. I've about 23 years now in the world of property. Come from an advertising and marketing background initially. Main passions, football, and spent 26 years as a British Army Reserve officer. So that's who I am for any new ones joining. John, why don't you introduce yourself?
John Corey, tech guy from Silicon Valley, started real estate investing as a side hustle at that time. It was 1983. Read a book called Nothing Down, and it's all, whatever from there. And these days, US, UK. And because of my tech and then investment banking background, my focus is more on fundraising and the logistics and how to scale businesses and things like that.
Fantastic. So we'll be going to our special guest after we do our initial market update. And Jonathan, by all means, you can jump in here with any additional points you would like to make. So John, starting off another year, you've obviously had a number of years in property in the past. You saw the different changes, ups and downs, but I suppose a summary I thought was good was this City Rise article. The initial quote: after a record-breaking 2-year period, which has seen house prices skyrocket across the UK, the property market is settling into a more sustainable period of growth. I thought that was a pretty fair summary of perhaps where we are. Would you agree or disagree?
Well, my personal bias is against anything like this that tries to put a spin on the future. And I bet if we went back 2 years ago and we looked up City Rise, and would they have said, oh, we're going to have 2 years of a record-breaking period in front of us, and then things will settle? It's like, no, this stuff is full of BS. What is interesting is possibly the sub bullets, because these are the variables, these are the changes, these are the things that are going on. It doesn't necessarily lead to a conclusion that you can put your money on, but it gives you a sense of what is changing, and then you have to take a view. And my suggestion is you want to take a view that you're not at the edges of the market. So lower loan to value, more cash on hand, things like that. Don't try to maximize your risk by really juicing everything up. And then as long as the demographics continue, you'll be fine. So this stuff is great entertainment. This is like the commercials during maybe a sporting event that like you should just let them slide by.
It is always the unknown, and nobody can predict the future, but I suppose people like to read people's opinions and make assessments from there. I mean, I think one thing that was very interesting.
They do.
Yeah, it's just human nature.
Exactly. And that's part of the problem, is that we get overly fixated on the predictive ability. And yet if you sat someone down and said, can you predict the future? Say, no, that's ridiculous. It's like, well, then why are you engaging in predictive conversations?
Yeah, but it's not fair to say though that all business is about trying to predict the future. I mean, if a business doesn't look out, 6 months, a year, 2 years, and make decisions based on what they think may happen, it's not necessarily predicting the future, but just trying to agree with what's happening.
I would say they need to plan for, I can't predict, so therefore I need to be stable anyways. We don't know where the threats will come. Jeff Bezos, in his language, has turned around what I call scenario planning, which is rather than focus on what might happen, focus on what will happen. So what is over the next 10 years likely in the UK? I think it's fair to say the population will grow. The sterling currency will be worth less because the Bank of England wants it to be less every year, 2%. So focus on assets that do well in mild inflation and expect rising demand for housing.
Yeah. Well, I think what was very interesting was obviously loads of predictions around doom and gloom, and after the September sort of mini budget that wasn't in the end, and the impact that had, that in November, GDP actually grew. I think it was like 0.1% from memory in November. But that, I mean, was completely unpredicted by almost anybody. So it is interesting that well, we know you can never guess the future, but I mean, who would have actually put money on GDP rising in November? So lots of factors feed into it. One of our fundraisers, actually Mitchell Walsh from Integritas, was on Channel 5 News talking about that and the impact it has for again the property market. So there's a plug for him, and you can get that on Channel 5. But in terms of growth areas, and Jonathan, I'm not sure how aware you are of the UK property market per se and how up to date you keep, but 2022, the highest growth areas were all outside London. I think most people predict that's going to continue. There's been a lot of investment into regional cities. They offer a higher yield. So I don't know if you take on that or any anecdotal evidence to support that.
It's really just a conversation that I have on a weekly basis with people signing up to our platform, and also just keeping in touch at networking events around the country. But it's more conversational things. Yeah, people are. I speak with a lot of people up in the north, and sort of backs up that. But yeah, nothing real specific to add really.
Okay, excellent. John, any takes on that?
Well, so showing my age, 20 years ago or so, I used to talk about London and the ripple effect, that when the economy changes, it starts in London and it ripples out. And depending on how far you are from London, it may never get there, or it gets there for a very short window of time. So I think this is another way of saying, oh, another ripple's happening.
And then the big $1 million question, will property prices fall? Again, I think most people are going to expect a fall of some description. Obviously, the question is, how far does it fall? But that has to be in the context, John, as we talk about, is there's always rises and falls. That's just the nature of the market. So you can't overanalyze that movement in the market too much.
It depends on how you measure it. Frankly, in high inflation times, you'll never see a falling market because the currency is going down faster. So it looks like the prices are still going up. It's, I would say that landlords do better when there's a fall, because it looks like their yields have risen, even though they haven't had to do anything, and buyers stop buying. So then there's more tenant demand. So rents actually do go up. So when there's a quote fall in the press, landlords win. And then when the tenants start to move out because they wait till the sales are over and the prices are going up, that's when the tenants will start buying again. And that'll cause vacancies. But at the same time, the landlords say, damn, you know, I got some vacancies, but my asset values are jumping up. So I win again.
Mm-hmm. Excellent. Okay. Any just last minute thoughts on that, Jonathan, before we move on? Just anything regarding the UK market, anything new and strange and startling?
Yeah, sure. Just going back to your second point. Yeah, so some of the conversations I've had has been around overseas investment. So from Hong Kong and Middle East and China, some sources, property sources that I speak with, they have a good number of clients within the overseas market. So yeah, very much they invest in areas like Manchester and Leeds, which is probably a common narrative, but that seems to be sort of continuing on.
Excellent. Okay, so I forgot to say at the start, if any attendees want to make a comment, then please put it into the Q&A, and we'll be able to deal with it from from there. Don't put it in the chat box. Go into the Q&A, and we'll be able to answer from there at the right time in the presentation. So let's get on now with our special guest. Obviously, you've introduced Jonathan already. The topic for this month is the benefits of connecting people in property. I mean, we do now live in a world where effectively you have tribes. LinkedIn's a tribe, Facebook's a tribe. The world really does revolve around tribes effectively. And while property is one big massive tribe, you could argue, then there's obviously subsections to that. So Jonathan, first of all, before we get into your model and a bit about your background, where you're from,
sure,
your educational background and your business background, please.
So sort of in one word, I'm an accountant by trade. I did finance at uni, accounting and finance at uni, and then I spent 10 years during my 20s working up from purchase ledger assistant up to finance director of a startup company that I was at for 5 years. We had a successful exit in 2018. It was a travel comparison site. We sold the business to Manchester Airport. I had an exit myself. I was on the board and had vested share options, EMI share options. And then during 2020, I exited just before COVID hit. During 2020, my plan was to go backpacking for a year, and obviously I didn't get very far. I managed to go to Thailand, Laos and Vietnam before lockdown on the 23rd of March, which was actually my birthday, where I was back home. And always been interested in property. Got my resi that I'm just turning into a buy to let, and I've got another property. And I thought, well, I've got a bit of money in the bank now from this exit. Let's spend a lot more time focusing on property. Started out creating spreadsheets, wanting to get into property investment myself, but then realized that with the uncertainty around COVID, and I'm an accountant, I'm a spreadsheet guy, I'm from the refurb side of things, I'm a bit thin on the ground. I was going to probably put all my money into property, and have a level of risk maybe I wasn't comfortable with. Being in the tech world, that's what led me to creating TRUSTMIX, which is the platform that I'm going to talk a little bit about today.
Yeah. Okay. And in terms of your passion, then, because I think when people are successful in life and anything, it's predicated, normally almost 100% of the time by a passion for something, a real desire to make something happen. So what makes sort of Jonathan Heavens tick? What gets him out of bed in the morning? What excites him? What motivates him?
It's funny because I don't really have like a preload. It's not something that's okay. But when I think about what is my passion, it very much links in with me. In I guess my background in finance, my job as a finance director was to provide reliable information for decision making, and I think that really links into my passion for having clarity. So clarity is such a poignant word for me. It's like, it's about, if you want to make a decision on anything really in life, it's about having clarity of information. So I think that's really led me to make sense that I'm then building a business all about how do we enhance trustworthiness and confidence in order to make a decision. So I think, yeah, my passion is linked to that search for being able to better assess information.
I love that word, disrupting. I think in business, that's a really good sort of business model if you're doing something that's actually disrupting. So, okay, so this connecting people and property, then explain TRUSTMIX, how that came about.
Yeah, so when I was in 2020, when I was going up to the Northeast and to other parts of the country, and having lots of Zoom calls, obviously during COVID as well, with building up sort of my team and contacts. If I was viewing properties, I was I was having Zoom calls with builders and property sources and brokers, solicitors, and I was coming off of these Zoom calls. Maybe just like some of you watching this now, like, who am I? And I was coming up thinking, well, maybe we could go on a be good friends or go out for a drink or something. But am I actually any good at doing that job that this person on the other end of the Zoom call or even a meeting was saying? So it just got me thinking. And then I was using a site called People Per Hour. I don't know if you've heard of People Per Hour. It's similar to Fiverr.com as well. I was looking for a copywriter at the time, and that platform, I got confidence quite quickly on who to engage with, who to say, well, yeah, can you do this for me? And I just thought, does this exist in property? And then I spent 3 months just going in, trying to break the idea, and just understand, do lots of competition analysis and understand, like, what does the landscape look like. And I got to December 2020, and I saw that there was a gap here, and there's other people doing things similar, but there was a place for a trust algorithm or a way to help to rate or better assess, and that's really how TRUSTMIX came about.
Is this your first business you've started, like, as an entrepreneur, or have you done previous businesses?
I've done previous businesses, nothing that's not been more maybe I wouldn't say a passion project, but like more of a hobby. Like, I've dipped my toe. So buying like sweets and selling them on eBay as a kid, or t-shirt business or something. I had something on a virtual world called Second Life when I was in my 18, which is an online, like, but that's a topic for another day. But that went well. I learned a lot actually from a business perspective, just on this virtual business. I made a little bit of money on that, and that was fun. But yeah, I'd say this is the first proper business.
Yeah.
Well, is this the first, or is this the second? Because you obviously were a board member of the company that was sold, and that was a startup, right?
True. I came in there to set up the finance function of that. So I guess, yes, it is. But in terms of me being the key decision maker, I would say I very much took full ownership of the finance function. Okay. So yeah.
So this is more your direct idea, with that when you came in as part of a core team after someone else had started with an idea. Okay. Yeah, I
wasn't steering the ship.
Yeah.
I was helping to help them to decide where to steer the ship.
Yeah. Yeah. I was laughing to myself there about your starting off with selling sweets on eBay. When John was that age, and I suppose myself as well, eBay didn't exist. So I think I was washing cars in the local estate to make the initial pocket money. It was my first business venture. So I don't know John, how you made your pocket money when you were at school.
When I was at school, I was delivering newspapers.
True. Yeah, I did that as well, actually. Yeah, there we are. So
sorry, go on, David.
No, you go ahead. Go ahead, Jonathan.
I remember I tried to get my mum as a kid to stop smoking, so I used to steal her cigarettes. I say steal, and then I was selling to my friends. So that was sort of a way to make a little bit of money. And also try and...
This has been recorded, so you've just outed yourself as a thief.
Yeah, well, even worse is he got others addicted.
Actually made money off your theft. But for a noble cause, does the means justify the end? There's a debate.
Yeah,
it was funny. Yeah. I just While you were talking, Jonathan and David, I looked up, you and I started on Messenger. That was how you first reached out. And the date is 23rd of October, 2020. And you're saying you were looking to create a social network for property related stakeholders.
Mhm.
And that was the start of our wonderful relationship.
Oh, nice.
So,
That's really nice. That's nice that you've had a look back on that. And yeah, we've met a number of times in person as well. Actually,
Yep.
no, I think it's only once at the Excel, at the
yeah,
Property
we did.
Investor
It was
Show.
the Property Investor Show. We met
Yeah,
upstairs at the Excel.
Yeah.
yes. It's,
Okay. So just explain then, Jonathan, who exactly is TRUSTMIX for? Who, I suppose, why is it useful? If you can really deal with both of those at once, just so we're clear as
Sure.
to who it's for and how they benefit.
Yeah, so it's for everyone in property, which is sounds like a big sort of claim, but it's I can get a little bit more into that. It's about connecting property investors, developers, and landlords with the full range of services that they might need in property. So some people say to me sometimes, "Oh, so it's a bit like check a trade." Yes, but not just tradespeople. And as we grow, as John sort of suggested, like when I first started, the narrative was a social network. That's a bit challenging from a startup perspective because people say that you need a lot of money for that and you need that whole network effect. So we will be getting to that at some point. But first, we are a directory, an environment where you can go on, search for other people. And it's a two-sided marketplace as well. So there might be a use for people to search for developers, for investors to search for investors, or developers or brokers that are looking to generate more business. And they can look at who's on the platform as well and engage and connect in that way as well.
Mm-hmm.
In terms of the usefulness,
yeah, was it just you mentioned investors there? It's probably a good time to jump in there. I suppose as soon as if I'm reading something online or someone mentioned investors, I suppose my regulation compliance antenna all of a sudden goes up, being the compliance person, and I'm like, oh, that's interesting. So I mean, you're obviously connecting individuals. Many investors are connecting. You're not facilitating pooled investment or transactions. Your role is connecting what those investors talk about and get up to, up subsequently is obviously similar to LinkedIn or Facebook or wherever. You're just connecting people.
Yep, exactly. It's the network. So it's an environment to help to find other people. But yeah, and also it's important for us as TRUSTMIX to say, like, we try and help provide this information. It's then also what you do with that information. So there is a due diligence piece that we don't stand alongside and advocate for people that are on the platform. We try and steer things in the right direction, but that needs to be taken into account as well.
How do you steer?
So yeah, and it's the actually very good point to come to. So what is our core USP and what makes us different to other directories that might exist is our TRUSTMIX rating. So this is an algorithm which I've created. Me being a finance guy, I sort of went off and like nerded out in an Excel spreadsheet, creating a trust-based algorithm, and it's contributing factors towards enhancing trust, and things like your reviews and your recommendations. It also goes further than that. Like even just having if you went onto my LinkedIn profile and you saw it was only set up last week, you would have maybe a lesser level of confidence or trustworthiness in me, as opposed to maybe if you went on David's or John's, that's a lot more fleshed out. Now, that on its own doesn't mean to say that people are trustworthy, but it helps. So we factor that into our algorithm and then provide a rating between 0 and 5, and then we order by who has the highest rating. And that's us steering people.
Interesting. Okay, that sounds excellent. And in terms of your been really specific, if someone's property is a wide market, there's so many subsections, moving parts, but your popular categories, as your platform talks about, if someone's looking for a broker, a developer, a lawyer, architect, these are all some of your more popular categories that people come on to TRUSTMIX to then identify someone who may well be trustworthy or should be trustworthy to deliver a good service.
Yeah, I mean, just on the trustworthy point, it's about yeah, it's not about saying who is trustworthy, because we can't ever claim to be that. It's who has a steer in that direction. It's like if you go on a checker trade and you look at the top three and you make contact with them, it helps in that direction. But yeah, so if we take a broker, for example, so yeah, you would go, we find that that's a popular category that people search for, so that you can say, right, I'm looking for a broker, and you can say the area that they specialize in. So maybe I'm looking for a broker for self-build finance, or a HMO mortgage, or a buy-to-let mortgage. That helps you to narrow down that field. Property sourcer is another example. If people are looking for property sources, they can go on and say, okay, I'm looking for a sourcer in the area of Manchester or London for land development, or for you know, any other investment strategies that we've got listed on our list of options.
And what have been the biggest challenges? I'm thinking as a business owner myself of a relatively young business. I mean, what have been some of the challenges you faced, Jonathan, sort of getting this off the ground? You've got the concept in your head, you know, you believe in yourself and your ability to deliver it, but what have been the challenges at actually growing the business?
Yeah, really good question, and it's one that I think about a lot, obviously. So our biggest challenges as a directory and ultimately a marketplace is critical mass. So it's about getting enough people on it such that you have that usefulness and usability. And then there's the whole chicken and egg problem. So you have on one side your investors, developers, landlords, but also you've got all of the businesses. So it's about fleshing out the directory, so that it's like if you search for Google and there's only 3 search results, you want there to be a wide enough selection of options, even to have that perception of there being a good enough offering. It's like if you go in a shop and there's only a couple of things on the shelf. So that's been, I'd say, the biggest challenge, and the challenge that we're actually really focusing on during this year.
Staff wise,
So,
if you're based
you said, Jonathan, about directory versus marketplace. Are those different? And if they are for TRUSTMIX, how should the listener understand what is a directory versus what is a marketplace?
I think there's a lot of commonalities with that. I think to me, directory is easier to understand in terms of what that is. From generally, in terms of general people, that is a directory. It's a listing. It's like yellow pages. Whereas, like, what is a marketplace? A marketplace suggests there's this two-sided environment. It's like if you go onto Amazon or eBay, I guess you would say that that's a marketplace. So maybe there's a link in terms of how people see things, where marketplace is more product-led, whereas maybe a directory could be more service-led. So I think it's semantics. Maybe you've got a different opinion, John, but I would say they're kind of similar. But
well, I'm not sure I have a complete view here, but just what you just said, it sounds like a marketplace involves transactions, where a directory can be more a way to find information.
Yep. Yeah. So in that case, it would be termed more as a directory than a marketplace. Yeah. Right now, we don't have transactions taking place. There is, in terms of the ideas, and there is somewhere in the idea pot about putting that in, but we haven't got that far just yet. We could go down the escrow route in terms of de-risking between investors and sources, or but that's not something we've got to just yet.
Okay, so last questions before we move on with the broadcast. In terms of growing your staff base, or your human resources, you're obviously based in Copenhagen. So do you have an office base there? Do you just recruit globally and all work from home, or what's your strategy around that?
Yeah, it's and because it started around COVID, it was all 100% just fully remote. So yeah, I've got a team in England. So I've got my CTO, my tech guy lives in Leeds, and then got a designer in Hull, and then I've got a small team based out in the Philippines. And that was something that I was a little bit, you're always skeptical of, I think, when you go overseas, but I built some correct connections and built up my trust and confidence level to actually get that on board. And really happy with the team that we've got at the moment. Obviously I wish we could have an extra 10 staff, but it's quite limited in terms of this is self-funded by me. It's all very bootstrapped. We've got a little bit of funding, but nothing really significant. So that's another big challenge of mine, is the lack of resource.
I actually thought you were going to say, when you started that sentence of, I really wish, you were going to say, I really wish I could have all the staff in Copenhagen, but the beer's too expensive.
Yeah, well, yeah, I suppose there is economics that factors into that.
Well, it's also funny that when you go overseas, well, Jonathan, you're overseas, so you're a bit dodgy. So it's always relative, like, where is someone and what is overseas to them, and what does that mean? And it's actually about team cohesion. It's about communication, commitments. I've seen teams that are all on the same floor and they still can't deliver. So
yeah,
fair point.
No, all good. Okay, well, listen, we're going to have to move on here. We'll obviously give you a chance, Jonathan, to have a final wrap-up comment at the end. But thank you for that. Really interesting, just to sort of understand your model, what you're doing with the TRUSTMIX, and if anyone attendees wants to get in contact, what LinkedIn the best way, or is that the best way of contacting you?
Yeah, LinkedIn, Instagram, Facebook, email, my contact number. Yeah, but yeah, LinkedIn,
TRUSTMIX,
all of them.
Okay, fantastic. We'll hear from you at the end. Okay, so a little bit of platform updates now. And we've got a bit of a new surprise section we'll come to in a minute. And John's all excited about this section when he gets under the spotlight, but we'll come to that in a minute. So just by way of some platform updates, our investment portfolio manager, Dal Ray, chose to take a job back in his sort of first trade of FX trading. So unfortunately, he's actually departed the company now. I wish him every success in the future. Certainly a very valuable asset at the time he was here. And what we've done is, in the interim, to cover that lack of resource that Dal was doing, we've actually brought in a couple of resources. So Karen Yoon, who is a trained barrister and an FCA compliance specialist, is giving us some time, which will help particularly on the onboarding of projects, the review of the equity offer documents, the shareholder agreements, and looking at those from an investor perspective. And also Antoine Defresne, he's an ex-investment banker, now a professional property investor. Some attendees may know them as the Investables, which is a business that they run. But absolutely delighted to have their resources at sort of my disposal for the business. And again, Antoine will be helping with some of the investors, as well as helping to onboard the projects. And both Karen and Antoine come with a huge background in property investment. So, John, I know you obviously know both Karen and Antoine for many years, and I'm excited about being able to use their experience within Leo crowdfunding.
Yeah, I mean, when I was running the monthly meeting, Karen attended 1 month, and that evolved where she then became a bit of a co-host for that, but in particular also a co-host for the lunches we would do in the Shard up in Hutong, the Chinese restaurant with a great view. And Karen and I would host these lunches on a Sunday. And then later Antoine came into the frame. I've known him less, but I've gotten to know him. And yeah, the two of them are, as you described, when it comes to their backgrounds.
So I'm certainly delighted to have them on board. Projects coming soon. Just to highlight these, we have St. Ives in Cornwall, which is a conversion of an existing guest house into service accommodation, and this is, I think, quite an exciting. I suppose, John, we actually haven't had one just like this per se in this area of sort of high demand down in Cornwall. I know you've been working on.
Has the platform ever had a service accommodation project?
No, that's what I'm saying. Not that's what I'm saying. Not like this, or in this particular sector. Correct. Looking forward to getting this one launched.
Correction. You have there's a private raise already going on. The Dunleary House. So there's two projects which I would say are new to the platform when it comes to service accommodation. And for those who are listening that are interested in service accommodation, this is a perfect way to look under the covers of someone else's deal, understand the mechanics, maybe get involved if you want to sort of watch surreptitiously by being a passive investor. So there's lots of opportunities to expand your knowledge of service accommodation.
So watch out for that one over the next week or so when it goes view deal, and there'll be project webinars, etc. Announced for that. So you'll be able to listen to Mark Fernahau from Prosper Property. Some of you he actually has a case study on our current homepage on the platform. So if you want to have a look at this type of a project, then go on to Prosper Property. Mark Fernahau. From memory, John, was it like Ocean View or Ocean House, I think is the name of the case
I
study?
think that's the name. And what's interesting for the accountants in the room or listening in, Mark's all about reporting numbers that an accountant would understand. So EBITDA and other measures that are classic accountancy type metrics.
And there's a lot of interest in our register interest option on the case study. So it's going to be good to communicate to those people who have already indicated that they're interested in this type of project and see how that converts into real investment. So alongside St. Ives Cornwall, which is coming, there's actually going to be a second raise for the old woolen mill. This was a planning uplift project, again, down in Devon. And originally the fundraiser, Susie Jenkins wanted to raise, I think it was 150,000. The platform raised 111,000 on that first raise. So there is still a gap of the funds that she needs to complete some reports, update some reports. So she's coming back for effectively the balance of what she knew she would need for the project. And again, John, interesting one, a big project, but it's progressing well overall.
A comment on that one. The amount that was raised probably would have been sufficient if it wasn't for the council taking excessively long. I think it's a 12-week process, and almost 18 months later they got there. And it included the change of staff more than once at the council when it comes to reviewing the files. So a few of the reports that were done now have to be refreshed. And that's part of the trigger for like, okay, we got to buy this report a second time. So.
Yeah, so this will be coming again very soon in terms of keeping an eye out for that, probably next week, looking at view deal. And then there's a private raise in Dudley. It's a buy-to-let project that will be launched privately in the near future as well. So lots of activity happening in the background. In terms of live projects currently, we have a private deal, which if anyone is interested, if you contact us, there'll be details at the end. We can let you have a look at that, but it's not been marketed on our site publicly. This is Central Point up in Liverpool. This is from the Integritas development group, and it's the building of sort of new apartments in Liverpool as part of a bigger development. So a very interesting project, and again, you can access that by giving us a call. There's a project webinar you can listen to if that is of interest. And then we also have Stafford Gardens, which is currently still live, planning uplift project, 42 apartments and 4 townhouses. Mark Afiva, Denelise Homes is the fundraiser for this, and Mark's just waiting for some update information on the project that he's hoping to share very soon with the current investor base. And again, there's a number of investors who are sort of waiting that information before making their final decision to invest. So yeah, this is active, and again, there's project webinars you can listen to in due course. Another quick update in terms of platform. One of the benefits of investing through a crowdfunding platform is that we do have the facility to issue tax statements. So if you weren't aware of this, and there have actually been a number of investors have contacted me saying, I'm doing my tax return, which projects have I invested in? What ones have you paid out? Well, if you go to your account, top right-hand side, do the drop-down box to profile. Down the left-hand side of the profile, you'll see statements, and you can just press tax statement, and it will literally print out this cover sheet, and page 2 is all the investment transactions in that year. So you literally can take that, give it to your accountant, job's done. So this is the used for the purpose of section 975. John, this is an interesting sort of I suppose a helpful aid when it comes to just keeping track of your investments.
Oh, yeah. Well, I mean, I like it because I have a number of investments now on the platform, and some of them are quite small. So the idea that there's a easy way to see them all, to then collect the assembled impact of what I invested in, what is paid back, what return, if there was a loss, so everything can be put in one place that I can just turn over the accountant. I was talking to a friend who's not actually an active investor in the platform, but they have a number of other investments they're doing. And they said, they're trying to reduce the complexity by, in their case, they want to actually reduce the number of investments. And I'm suggesting, well, why don't you just look at having your investments go through a dashboard like this is? So then all the information is one place, and you can hand it off to someone like Jonathan if he's your accountant, and let him get on with it.
Mm-hmm. Yeah, it's definitely very helpful, which is nice. Another sort of platform changes, and we're going to discuss this more detail next month, but just a bit of a heads up.
Let's be clear, this is not platform changes that are unique to you. This is mandated changes for all platforms that are regulated in this space. Yeah,
that's a really good point, John. Thanks for clarifying that. So this is changes that have been implemented as a follow-on from policy statement 2210 by the FCA. I think from memory, it was the 1st of August, a few months ago. And the changes that investors, this is for investors who are investing in the platform, or should I say into deals on the platform, is a better way of putting that. Effectively, here's the 3 areas that we'll look at maybe more detail next month. But this does come into effect from the 1st of February, so it's important that we mentioned it today. There is a 24-hour cooling off period from the start of the registration process, which is the click of a button to start the process, and being able then to actually make an investment. So no longer can someone start registering the process, do their appropriateness test, KYC, AML, and then immediately invest. There's now a bump in the road, if you will, a stalling 24 hours before the person can invest. So that's something new. Obviously, this is for new investors. If you're an existing investor on the platform, this obviously is not relevant to you. Another step for people who are registering on the platform for the first time is investor categorization. There's now some additional questions that will be asked to confirm whether someone is high net worth, sophisticated, or retail. So again, if you've never registered before, this will be the first time you do the journey. But for someone who's perhaps sending a friend or someone else, be aware that there's an additional set of questions just to really categorize people correctly, which again is something that the FCA are very keen to do. And then the third big change, and this will happen for everyone, is as you go to make an investment in the future, there'll actually be a personalized risk warning. So in John's case, the message will literally be, "Hi, John," and making sure that the investor understands the nature of risk, that the capital is obviously at risk, that all the money could be lost in this type of investment, etc. So it's like an extra bump in the road where people really have to pause and confirm that they definitely want to do this investment and understand the risk. And overall, John, it's just improving the environment that we operate in.
Yeah, I mean, this applies to all crowdfunding, whether debt or equity. Exactly how it's implemented might be slightly different, but the FCA is trying to address the fact that sometimes people don't pay attention. They get caught up in rush and the emotion. So we're going to have a cooling off. We're going to have a personalized message. John, Mary, Fred, whatever your name is, do you understand you could lose your money? And this idea that we need to be super clear about which category are you in, because it actually will change the types of things you should be shown. So the FCA again is evolving and changing as they get more feedback from the marketplace. I think it's quite healthy that it's like a feedback loop, whereas we understand how people behave, we'll actually put in the appropriate speed bumps or little barriers or guardrails, and people can still make their own informed decisions, but they really do want to pause you and say, "Are you sure you've done your homework?"
And it is interesting that the trajectory, again, is on the one hand, making sure investors, understand and are aware of the risk, which is again one of the benefits of crowdfunding platform is that we're in the middle. We're not giving advice. Investors make their own decision if they want to invest or not. It's their responsibility, their choice. They're categorized with the information that they give. And on the other side then is the whole area of financial promotions, which we'll talk about more next month. And again, some things that the FCA are doing just to really highlight, to make it easier for investors when they see adverts, when they see enticements to invest, or information about an investment. Those that have been approved as a financial promotion will be clearly labeled. And therefore the idea being that investors who understand the FCA rules will almost by default look for the tag that says this has been approved. And if it doesn't have a tag, it immediately highlights it. It's an unregulated, unauthorized promotion of an investment. So we'll definitely discuss that, John, more next month. I think that's going to be very, very interesting. So last section today before we wrap up, we've started a new Corey's Corner. We had our Ask John series for the last year and a half or so. So just to make it slightly different, John, where we're just asking you questions, there's your opportunity just to make a point, an observation, an educational piece, whatever you feel you want to do on the day. So for this first one of the new year, what's your words of wisdom?
To picking up on just what you said earlier, and also what Jonathan said quite a bit earlier. So when you meet another investor, you're at a networking event, you're on TRUSTMIX, you're on Facebook, you're on LinkedIn, you're wherever it is that it happens. Well, if the FCA thinks it's important that you have cooling off periods, that you don't make rush decisions, that you conduct your due diligence, that you honestly consider the fact you can lose your money in any of these investments. Well, if that's important for the regulated space, it probably is important for the unregulated space. And if you're chatting with someone in a pub and they're telling you about how great their deal is and they need the money by next Tuesday, and the world's going to stop if they don't get it, but otherwise we're all going to become billionaires, you need to put the brakes on. You need to slow it down and say, well, okay, fine. And how much can I lose? Oh, your money's secured. It's like, no, how much can I lose? It's no, you'll have a charge. It's secured. I'll even give you a personal guarantee. It's like, no, okay. So basically you're being bullshitted and you're in trouble. So back off, tell them thank you, but no thank you. These sort of things you see on Facebook, things you see online where people are rush. That's not a good sign.
Mm-hmm. No, I think that's a really good sort of first Corey's Corner, the way you've covered that. I mean, it is so important that people are aware that if they've been offered an investment, that they need to be, careful, but also be circumspect as to how they take the information in and how they assess the information. And the faster it's needed and the bigger the returns and the more security offered, I think to experienced investors are 3 red flags or alarm bells that go off almost immediately. But for maybe less experienced investors, they're maybe the things that still attract people. So it's very, very important to be aware of that. So you can see there on the screen, John's like a link. You can go to propertyfortress.com/ask-John, and you can book a 20-minute call with John. So if you want to do that, that is the way of reaching out to him. So a free plug for you, John, based on your Corey's Corner.
Questions are welcome. I actually enjoy them because, frankly, being a bit lazy sometimes, if they ask me a question, I can just tell them what I know, where having to think it up in the first place is harder. So bring a question and makes the conversation flow.
Yeah, excellent. Okay. And you'll obviously next month lining up, and I've got 2 guests lined up, and I'm just talking to say which one I'm gonna bring on this month and the following month. So we'll get that out in really good time in terms of next month. Of course, you can get us on Facebook, LinkedIn, Instagram, and of course the recording of this will be on YouTube within about half an hour, and you can see past broadcasts as well. So that takes us to the end of our first one of 2023. The questions that come in, well, one of the attendees just indicated that they are looking to, what's that, relation to potentially setting a private sector version of the Help to Buy shared ownership scheme. And yeah, by all means, reach out, just an email on that. We have a conversation about that. There may be some synergy in that. I think that was the main question that we had from there. So listen, Jonathan, I'll let you wrap up as your first time on our broadcast. I'm not sure how much you knew about Leo crowdfunding before, but hopefully you enjoyed your time on. And any last minute comments you want to make before we finish?
Thank you very much. It's been been a pleasure to be invited on as a panelist and to have a chat and learn more about crowdfunding. So I'll hopefully tune in to some future webinars that you hold. So thank you very much.
Excellent. Thank you very much for coming. John, anything last you want to say?
Well, notice, Jonathan, we didn't poke you to reveal all and how the scoring algorithm works.
That's an offline conversation.
Yeah, exactly.
Sure.
Okay, listen, everyone, thank you very much for joining us. Hope you enjoyed, and definitely put a subscribe or a like button in the YouTube channel if you enjoyed this session. We'll see you again next month on the third Thursday at 12 noon. Take care. All the best. Bye-bye.